Hi, this is Greg Bridges, and today we're trading for pips. So today's Saturday morning. It's about 6:24 a.m. And even though the market is closed right now, what I want to do is go over some basics about trading in Forex. So today we're logged on to our Forex.com web platform. And you can obviously sign up for free with Forex.com, or you can set up a demo account, which means that you'll trade with fake money, and that you can get accustomed to doing trades without losing your real money. But for today, we're going to show you. My live account. So if you look down here, this is my live account balance, which this is actually my real money that I've invested. So we see right here we have $1,879.90. So what I actually invested to start this account off was $100, and I played with maybe 1 cent trades for maybe a week or two. But I also had been demoing Forex and having other live accounts for over the past 3 years or so. And so I just pretty much visited different platforms and tried to figure out which one was the best platform for myself and my style of trading. So I've landed on Forex.com for the past 3 or 4 months, or 3 or 4 months or so. And so I put $1,000 in the account. As you can tell, we're at $879. And then you see this says unrealized profit and loss. So P and L is profit and loss, and you see it says 143.14, and my margin used is $423.20. If you go down here to this unrealized profit, it says $152.62. So off this particular trade of 12 units or 12 cents for the New Zealand and the Swiss franc, I'm up $152.67. And then if you look at this trade right here for a sell, it's the US dollar versus the Swiss franc, and I'm down negative $9.53. So the difference between 152.67 and 953 is 143.14, right? So margin used would be the total of that 143.10 and that 180.11. So basically what this is saying is, even though this is my own money, this is how much is put to the side out of the total of the 1879.90 at this particular point. And what they're saying is, we will allow you to go negative $243.10 before we take you out of the trade. So let's say I got into a trade on the wrong end and I wasn't paying attention. They will allow me to go negative $243 before they take me out of the trade and take that $243.10. On this particular trade right here, they will allow me to go negative $180.11 before they take my $180.11. So once it hits that range, they're going to take the money from me, and I'll be canceled out of the trade. So what do we do to prevent that? Well, my particular style of trading is called naked trading, and what we do is pretty much trade at highs and lows. So it's kind of like the stock market. When you find a particular low point, you would buy. Or when you find a particular high point, you would sell if you were doing option trades and stuff like that, right? So pretty much what I'm going to show you today is um, how to identify these ticker symbols, which is what you have in the stock market, but it's the Forex market. So AUD stands for the Australian dollar. USD stands for the US dollar. We're in a 1 hour time frame. This whole thing time frame, but we're on a daily chart. So you have different charts, 1 minute charts, which it's loading right now. But each one of these, if I blow them up in size, each one of these represents 1 minute of a trade, because we're in a 1 minute chart, right? So these are called candles. Each one of these, the green and the red. The green are up candles, and the red are down candles. And then these lines that's coming from them, they're called wicks. So We go right here. I like to be within the hour chart time frames. Um, it pretty much tells me how the market is moving by the hour. Um, and so I can see a larger area in time. You also can just move it over here, so you can pretty much see that the market was down trending, going down. These long red candles showing it is going down. It went down about right there, then it started up trending a bit, a little down section, but overall it started back going up. Right, this is the Australian dollar, US dollar. So I look at it in my hour view. I also go over here in day view for the most part. It's loading up, and then I'll shrink it down so that I can see what's going on in 2019 on over to the 2018 time frame. So they call that pretty much historical data. So I want to know what the market was doing back in 2018. As you can tell, we're in 2018. It actually goes into 2017. So all this right here, pretty much from this point on, was all 2018. And as you can tell, we're in May, June, July, August, September, and you can see that the market was going down, 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 and right around here on the 31st, close to down that, around that range before the new year, the market was at 69150, and it actually has a long wick to show that it dropped down to 67343. Was it possible for people to get in at that level? Yes, it was. It could have been a flash where it just dropped down, or it could have been over a couple of minutes or whatever, and you may have been able to get in. So at that point, that's the lowest that the market has been for the whole year of 2018. So at that point, we would have entered a trade. Did I catch this trade? No, I did not. I did not trade the AUD USD at this level at all. But we also would then have looked back up and said at 2018, in the January time frame, the Australian dollar, you do like that, Australian dollar was pretty high. So right around that range, it was like at the 8-1 range, you know. So we would have sold because it's at such a high level. So we would have sold it down, and we would have probably sold it down to right about that level. That's where it dipped at last time. So around the 7-8 level, we probably would have sold this to make a profit. And as you can tell, it's gone down a long ways from its 8-1 level, and it's all the way down into the sevens at the present moment, 7-0 range. And it has been lower, right? So that's pretty much what we do. So we would sell at the highs, and we would buy at the lows. One other thing that I would note is how I look at um, um, something called support and resistance lines. So if you are in Forex.com, I would tell you to click on here, and I would click on horizontal line, and you see that's a color. So this green color, I would use that for a support line. Support line is pretty much saying that it's going to go down to this point, and then it's probably going to bounce up. So for instance, I will use this as a clear indication that this is a support line. So the market was up here, it traveled down. You can even use this one as a minor support line because it did travel back up a little bit. But for the most part, we'll say this is a major support line right here because it traveled down from here, bam, it hit the line, and then it started going all the way back up. You met a little resistance right around here, but it was just a little, and it probably only lasted for a few days, maybe a week or so, before traveling on up to the next mark. And as you can tell, it hit up here. We would then click on this again, would change the color to red to say right here, for the most part, is a resistance line. So this would be a major resistance line. As you can tell that we have a little small wick at one point that touched up there. I'm just moving over to the side so we can see better. So small wick touched up there. At one point, we got close. Like I said, we were up here. We decided to go down. Boom, touched the support, and then it traveled back up, hitting the line again before going all the way back down and touching the line and actually going a little bit lower before going up a little bit more to another resistance. And if you go back in time, you say, okay, well, can we use this as a resistance line? Yes, you can. If you go back in time and you just follow the line right here, you can say, damn, well, right around here, it was showing a little bit of resistance. If you go back even further, right around here, you can say it was showing some resistance, you know, and it dropped down a little bit, right? So if you scroll on, you can see that it finally broke through the support line and it dropped down to an even low point, you know, and as it's been dropping and dropping, it caught some type of resistance. It market kind of traveled sideways before dropping down even lower to about this range. So for the most part, the new support line will be right around there because that's where it actually started to gain traction. So if I were gonna make another major support line, I would just go right around here and I would click and say, hey, at this point, this is another major support line. So it's not possibly going to drop below the 6-9 range. But I have to note that it has went that far with the wick. So just for me to know, what I usually do is I make another resistance line, and I'll put a gold color in, and then I'll change. This is just for me. I'll change it to a specific or a custom. Um, Click on it again. I'm sorry. Yeah, there it goes. So I do that just to tell myself that, hey, it has went lower. This is a different color code. This is another possible support line, but it was a wick that happened. So it dropped down, so it can go as low as that, and possibly even lower, but not much lower. You know, we're pushing the envelope if it goes even that far down. So if it does go down, if we're able to catch that in a buy that low, we'll be blessed. But the chances that we are is slim to none, right? So once again, you see that it hit down there. If you were able to get in at that area, I'll change this to arrow. If you were able to get in at this level, that's good. And then you just watch it travel up. And it would have traveled up to right around that area right there, which is the 7.2 area, before going down a bit to where it's at now, which is the 7.0 area. So if it went up to here, you were able to catch it at a buy down here or right here and watch it go up, make a couple of pips, get out the trade, watch it go down a little bit more to 7.0 area. You could have did that for a sale, and then at the present time from there, watch it go back up to the 7.3 area and then back down. So at this present moment, we would say that, hey, we have an area that's possibly a minor resistance area. So we could possibly say that this 7.243 area, 247 area is a resistance area. So possibly when it hits this area, it's gonna go back down. We do know that it broke through for a few more extra pips, but after that it dropped right back down to what could be called a minor support area. So do we think it's gonna go up or down? At this present moment, I'm not sure. I'm not sure if it's gonna go up or down. But I do know that it's right around another resistance area. So the possibility of it hitting that resistance, I mean that support area, it's hovering around the support area. So it's a possibility that it could hit that support area and it goes right back up. So that's pretty much it when it comes to trading. Um, Excuse me, guys. That's pretty much it when it comes to trading with doing naked trading with what we have here is resistance lines. and the green line support line, and this is would be a support line for wicks, but that's for my own personal use. That's what I would go by. So pretty much what you've learned today would be to how to trade at the very highs, which would be a sell, or trade at the very lows, which is right here or right there, and then that would be a buy. So once again, if it came down to that point and you saw it at 0.67601, you would then click on the buy, which we can't do at the present moment, but you would click on buy right there, and what you would get is what the actual price is, the market price is going for. So it would be up to you to buy at the market price, or turn around and try to put in some type of limit order to say, hey, I want to buy it at 6, 7, X amount of dollars for to catch some type of a deal, because there's a possibility that it may go even lower. So that's all up to you. So that's pretty much how I sell and buy when it comes to Forex. If I go into load charts here, you may be able to see one of my trades that I have going on. So trying to think, what am I trading at the present moment? We'll say NZD shelf, and yeah, so it's not showing that I'm trading this at the present moment. Everything that I had down here is cleared. But anyway, if we look right around here, we'll say that, hey, this is definitely a resistance line. So it made it up to this point. Bam, we probably would have entered the trade at this area right here, and then it dropped all the way down to this point right here, and this would have been a support area. So this would be a resistance, that would be a support, and then it came all the way back up here before dropping all the way back, well, dropping down to this uh, support area. So it's definitely a way to make your pips. So it's up to you how long you want to stay in the trade, whether it's a weekly trade, whether it's a daily trade, whether it's swing trade or whatever it is that you're trying to do, whatever your goal is, and how much money you're trying to make for a day, week, month. Our overall agenda, at least for me, is to make anywhere from $300 to $400 a week off of the trades that we do. We may only do 3 trades that week, um, but the trades, when they are executed, they're definitely made with the intention of bringing in 100 or so pips, sometimes even more. So that we can hit our target for that week. Sometimes we adjust it, other times we don't, depending on what's going on with the market, or the time of the month. So that's pretty much it for today's lesson on trading for pips. So once again, with a quick overview, these red lines are at the top. These are called resistance lines. These green lines right here are support lines. Once again, resistance lines are lines that pretty much where the candles are going all the way up to. The market traveled up to this area, and then it stopped at some point, and then it reversed and went back down. As you can tell, I don't have support lines all over the place, but major support lines are what I deal with. Right here, major support line where it went all the way back up, and then came all the way back down to the support line again, all the way up, to some type of point. It just hit another resistance all the way back down, boom. And at this point, it broke through the support line and it went all the way back down to this area, to another major support before going up. So that's it when it comes to trading with support lines, resistance lines, and things of that. So, guys, thank you for tuning in. Hopefully, you learned something that hasn't been too confusing. You can always give us a comment or send us an email on trading for pips, or even like I said, just give us a comment on the Facebook group, and we'll be more than happy to explain this to you, whether it be in a video format or whether it's inside the comment section. So whatever you would like to do, reach out to us, email, comment. We're willing to help you out when it comes to your trading. We're also going to be doing signals at some point to where we'll tell you when we're about to enter a trade, whether it be a sell or buy, so that you could possibly make some extra cash off of your trading as well. So you guys have a wonderful, wonderful day. It's 6:44 a.m. here in the United States, and I wish you all